Welcome to the halftime report presented by Tackle Trading. And if you're new to the halftime report, make sure to hit that subscribe button to get all of the content we put out there from a live or an on-demand perspective on our Tackle Trading YouTube channel. And once again, if you're new to Tackle, I'm going to be doing a webinar here next Monday on swing trading. So definitely make sure to, and Tyler, if you will, go ahead and show that link to the webinar on Monday. We will post it there in the YouTube channel here today as well. So make sure to hit that button, subscribe to that, hit the set reminder so that you can come and join me on Monday on a webinar on swing trading. I'm also going to be announcing in that webinar our Tackle holiday promotions that a lot of Tackle Trading loves to start upgrading certain things at Tackle Trading. And so we're going to be announcing that on Monday as well. So get excited for that, Team Tackle. And today in the halftime report, I got the amazing Tyler Craig on Wednesday as usual. We're going to do another edition of a Tackle short today called Jedi Options, where Tyler is going to, I believe, Tyler, you're going to be talking a little bit about utilizing risk graphs and understanding risk graphs. But before that, we're going to journey through the market Skyline, talk about the indexes, sectors, talk about commodities. We're going to get into some stocks in the news today. For example, Visa in the news today, Boeing in the news today. And yes, we got to talk a little bit about Activision as well. Earnings roundup as well before Jedi Options. But first, Tyler, how are you today, my friend?
Doing better than the market. Been a while since we saw a little bit of red, especially in the areas that I track. But I'm good, man. I'm good. I'm excited to be here. Excited for the Jedi Options segment, and trading's been good to us for the last few months, really. So, can't complain.
I'll come back to the major market indexes, but let's talk about the index that you're referencing here today, the one that is underperforming and violating a little bit of support level, the Russell 2000, the small and the mid cap index. Really the first violation of any degree of short-term support, violated the 9 EMA, coming right underneath that 2400 handle as well. The volatility aside, Tyler, how are you seeing this pullback in the Russell 2000?
Well, look, I mean, you tend to get into this false sense of security when the Russell goes up every day for a couple of weeks and just feels like it can do no wrong. But this is the flip side of that. You know, you get pullbacks, you get consolidations after big run-ups. And you've seen a shift in momentum, right? You've seen a shift in momentum. And to your point, yeah, today is really the first day that I think you take note, because previous to this, you expected a pullback, a pause. The dip just didn't get bought as quickly as you know, you would have liked. That said, and we were talking about this pre-show, if you look bigger picture, it's the breakout is still intact. We haven't gone back into the trading range. The ideal scenario is that this is simply a retest of the top end of the range. Given the strength of the breakout, you would expect that the next dip gets bought. So I don't think you abandon hope here. You recognize that we do have short-term weakness. We did break a minor support zone, but the big picture still looks fantastic.
I think it does too look fantastic. And the simple reality is no trend starts to get consistency without some pullbacks in it. There's no trend that lasts in the market without some degree of retracement, some degree of pullbacks. And so I do think this is, I don't want to say healthy, because again, it did violate some short-term momentum support levels. But at the end of the day, I don't think the confidence in the Russell 2000 is truly going to build by a majority of traders out there until you have tested that breakout channel. And so whether that breakout channel is right there at the 2350, 2360 level, or whether that comes all the way down to 2300, there's some support underneath this current price. And so you got that pocket, that zone between that 2300 and that 2350 level, where you have multiple moving averages kind of in that range as well, that could act as a support level. And so I do think you're a little concerned today with the small and the mid caps and the underbelly a little bit as well. But until we get to the point where, like, Yeah, that breakout was a fake out on the weekly chart. I still think you're looking at support building here and looking at another leg up in the Russell 2000, because once again, trends don't develop without pullbacks. Remember, it goes higher, high, higher, low. Those higher lows can happen on momentum. They can happen on horizontal support levels. They can happen on multiple levels of support. So we're obviously going to be navigating the Russell 2000 in pullback analysis. And it starts with where are those support levels, and then looking for the momentum to shift at those key levels of support. And where the Russell 2000 is, Ty, it could happen at any point, in my opinion. You could see slowing momentum tomorrow based on the 20 period moving average. You could see it based on horizontal retesting of breakout channels. I think you're in dip mechanics here in the Russell 2000 until ultimately that weekly picture does in fact change. But right now, I just see this as a retest of the breakout channel. We'll see if it adds up to something else. What about the other major indexes here today? A lot of fade down in the market, but not everywhere. Tyler, can you give us a quick journey through the market from an index perspective?
Yeah, look, we started at the worst end of everything we're going to look at. So if you can,
it's the one that violated today, right?
Yes.
Yeah.
This is the worst performer today by far. So if you can take this picture of the rut and have a somewhat optimistic takeaway, which is, look, got punched in the face, but the overall integrity of the daily and weekly trends still look great.
Yeah.
You take that in stride, and then if everything else we look at looks even better, it just starts to paint a more bullish picture. This would be a different discussion if the S&P was down 1.5% and if the NASDAQ was down 1.5%. But the reality is they're not. So if you take a look at the S&P 500 index futures, look, without even looking at the chart, I just look at the top and I say, okay, down 0.2, move along. Nothing to see here. How is this significant when it's almost unchanged on the day? This is an inside bar, hasn't even broken the 9 EMA. We're still within the range of yesterday.
Still lining up a beautiful breakout.
It's gorgeous, right? It's gorgeous, and nothing wrong. Yeah. So what it tells you is the sickness in small caps today so far contained. They're isolated and not spilling into large caps. They're holding their own, which we've said this a million times, makes you think today is a little bit more rotational in nature, a few isolated spots of weakness, not a rug pull across the board on risk assets, but more just some sectors that and smaller areas of the market like energy and crude, which we'll get into, just not doing so well. I see nothing bad about a yes. I mean, would have been nice to have gotten above yesterday, but whatever. Take your time. It's fine to me.
That's kind of how I see it as well. When you're looking at the S&P, a narrow range candle as you're fighting against resistance. Guys, let's just call a spade a spade. Breaking resistance is not easy in the marketplace. It takes some time, oftentimes, but it's not easy. Holding support is easier, in my opinion, than breaking out of a resistance level. And when you're looking at the Russell 2000, especially with the overall neutrality we're seeing in the S&P today, and when you're looking at the NASDAQ very quickly, sorry, Tyler, when you're looking at the NASDAQ very quickly, you're actually seeing a little bit of relative strength. And so on the Russell 2000, if you'll go to the intraday chart of the Russell 2000, what you're going to see is you had some fairly nasty volatility on the cash open. And that nasty volatility on the cash open violated some short-term intraday support levels that also coincided with a little bit of daily support level as well. That volatility just gave out a little bit. That's where I see the underperformance today is really at that cash open. And we know how algorithms do work. Once it violates something, stop hunts happen, markets come down a little bit, they find a daily support level. And so I don't think we should read too much into the Russell 2000 violating a momentum-based support level when you're still talking about that major breakout on the weekly chart, and we haven't seen the weakness yet start to show itself in the other indexes as of yet. Now, the Dow Jones a little bit of an underperformer today as well, but that has a little bit of Visa news in it. I'll talk about that here in a second. Are you seeing anything different on the Dow Jones though? I'm looking at a little bit of a Russell 2000 testing a support level and nothing more.
Yeah, I mean, ideally, you would want to see this hold above this little pivot. You break
For
that,
active traders, they do, yeah.
yeah, you break that little short-term weakness. But I think I'll put more emphasis on what's going on in the S&P and the NASDAQ, which both look fine.
I want to move into a little bit of sector talk very quickly, Tyler, and I want to take a look at the technology sector. We got a couple stocks that are breaking out of I would say fairly decent big importance. Apple, Microsoft, two of the biggest stocks in the world, two of the most important stocks in the world. Technology here outperforming a little bit against the market. When you're looking at Apple and Microsoft, Tyler, can you break down the breakout potential of both of these two stocks?
Yeah, and I think this is why we're taking the Russell's weakness in stride. Remember, the NASDAQ is of the three major, actually the four indexes we just looked at, the only one in the green, right? The only one in the green. And if you take a look, I know you guys looked at Microsoft yesterday. We had this on the options report. So bullish when it runs as much as Microsoft did, 280 up to 340. It's like, give me a pullback, and it drops to the 9 EMA, and they're like, that's all I got, right? That's it. We're going up again. That's impressive. That's impressive that that dip buyers came in so rapidly after such a big run. It would have been deserving of a bigger retracement, didn't get it. And breaking out again, right? This is a new high for Microsoft, continuing yesterday's strength. So that was impressive. And technically yesterday was kind of your official breakout.
We called it confirmation yesterday.
Yep. Yeah. And so Apple, which has really been a nothing burger for a while, it just hasn't done much, decided to wake up today, right? Like, this is a significant breakout. You're taking out, remember, this tried to break out right ahead of earnings and then fell on earnings. And it's been trying to get its footing ever since. And now you're seeing the second go. And it's like, if that's not confirmation, I don't know what is. I mean, price-wise, you're pretty far through. Percentage-wise, time we'll see. Volume should end up above average by the end of the day. That right there, biggest company on the planet, breaking out, ripping 2.25%. Look, I mean, I think that's helping to keep everything positive, afloat. Yeah. So Apple, I think, is the standout today. If I were to pick one large cap stock that is representative of large caps holding firm, I think Apple's a great poster child here.
Well, we always talk about the rising tide there, right? The rising tide comes in, raises all the boats. Apple is the rising tide. Like, that is who Apple represents. And when Apple goes up 2%, it's gonna cover a lot of damage in the actual indexes themselves. Same thing with Microsoft as well. Let's move on and talk a little bit about commodities here today. You know, Tyler, I've been tracking oil for the last couple of weeks, and every day either I'm talking about or getting asked the same question: what's your take on oil? And I always say I don't care what happens between 80 and 85, and if it breaks 80, I really don't even care about that. The only thing I care about as of right now is that breakout at 85. That will change as we go down lower and lower and lower as you start getting into reversal analysis. Right here, we got a violation of support. Now, there's not a lot of major news. The EIA numbers came out today. There was a little bit of a surprise drawdown, but a lot of what is happening over the last week on oil is a negative shift in sentiment based on geopolitical situations, right? And so there's a lot of rumors regarding, okay, is America going to tap into their strategic oil reserves? Biden in the last week has asked Saudi Arabia, he on the overnight action, he with his phone call with President Xi Jinping, he asked China to tap into their strategic oil reserves as well. And so there's a lot of rumors and chat about potentially these major oil producers out of China, not necessarily Saudi Arabia. OPEC said no a week and a half ago, and America tapping into their strategic reserves. But what we have not seen is anybody agree to actually tap in to their strategic reserves. What they have been doing is just talking about it. That has shifted a little bit of the sentiment on oil to the negative. This is a little bit of as a rumor without actual confirmation on news. That's what's really driving the value of oil to the downside. Now, as we break support here, Tyler, at what point do you start looking at, because I highly doubt you're looking at shorting energy stocks, especially with the relative strength in comparison to oil today. If you look at energy, it's
Yep.
holding firm. I think
That's
that's a
exactly where I was going to
positive
go
sign,
to. Yep.
right? I think that's a positive sign. So even with the violation, you're not looking at shorting oil, in my opinion, and you're not looking at shorting energy components. What you're probably doing is writing covered calls on those existing positions. But at what point would you look to start maybe looking at this as an opportunity on the down to pick up quality positions on the downside here?
Well, I always like when things overshoot. And the first day of a support break is a really hard day to do anything.
No, it's
Because,
stay away.
yeah, you can't make the case that, oh, we're way oversold, we're due for a bounce. It's like, I don't know, we just broke support. So then you say,
Can I
like the
give an
fact,
analogy on it?
yeah.
Okay, were you going to do an analogy? I kind of felt you were going into an
Well,
analogy.
I
I
was
want
just using the phrase fat pitch, but I want to hear what you were going to say.
Okay, it's like there's a dam, right? You got this major dam, okay, and all of a sudden the dam breaks, and you're trying to plug the dam with bubble gum, right? It's this major violation of support. You don't want to try to fix the problem right now.
Yeah.
You want to let it run its course. You want to let the volatility run through through the support level and let it shift a little bit. Let it subside. So initially when the dam breaks, you have this merge of water coming, but over time it slows down, right? You want to
Yeah,
see
go
the
further
exact same
downstream.
thing.
Go further downstream where it's easier to try to
Exactly.
put
That's
up a
all I'm
fight.
saying. And so when you're looking at this first violation of 80, testing the testing the 50-day moving average, I just don't have a lot of evidence on the 50-day
No.
moving average here. I'm looking horizontal, Tyler. I'm looking at 75 is where I'm looking. That previous old resistance channel. If you'll remember, we talked for more than a day about the range between 65 and 75, right? 65, 75,
Right.
65, 75. Ultimately, that eventually broke. And so I think with a lot of this movement in the oil market being more rumor driven than actual confirmation of news, sending that down a little bit, it's not like the inflationary environment is over here. And I don't know a lot of people that are projecting inflation is going to get fixed in the next 6 to 9 months. I think dip mechanics are going to work here. I like 75. Tyler, agree or disagree?
No, I agree too. I think you're long-term bullish. Give me oversold into major support. I'll sell puts all day long.
Yep.
Yeah.
Well, 100%. Let's shift a little bit. Let's talk some metals here today, and we're going to start with gold. Gold forming a little bit of a high base as the dollar is overextended. A little bit of scenario I see play out here. Okay, because I'm seeing the dollar and gold behave a little bit more rationally the last few days, Tyler, and so that's kind of waking up the analysis to me. You got dollar overextended. If you'll look at UUP. Okay, you got the dollar overextended, showing a little hesitation, right?
Yep.
Okay, so technically here, if you erase what you're looking at, the dollar, technically, what would you expect technically up or down from here?
Well, down. I mean,
Little fade down, right?
Yeah.
Little fade down. So fade down, what's that going to do on gold?
Yeah. Up, you would hope.
Okay, high base threatening a breakout. Tyler, give me your technical read.
Yeah, to you've laid this out nicely. If I
You said fat pitch, bro. You said fat pitch.
Listen, if I whiff, you don't have to invite me back.
This is literally a church softball pitch down the middle to you, bro.
Yes. So what the picture you're painting is, give me that pullback in the dollar. Weak dollar historically should be bullish for gold. Then Matt can feel a little better about being bull gold, without being bullish.
Yes, this is all about me. Yes, 100%. It's just I have a hard time, and I've been saying it for a week. I have a hard time seeing this continue. They got to come back to some degree of historical rationality. I'm seeing that over the last couple of days. I like dollar. I like the dollar fading back down.
Well, and I mean, currencies aren't supposed to go bonkers, and so it's already made a big
what
move.
The dollar's
right?
going bonkers on. The dollar's the dollar's going bonkers on this, Tyler. Europe's slightly worse than us.
Well, and I guess the point
right?
is it shouldn't continue at this pace.
No,
Like it's like fine,
no.
you readjusted. You're telling me you're going to keep doing this? Like, come on, settle down a little bit. This is a currency, not Tesla. And then that gives me a more bullish backdrop for gold. Yeah, I agree. I agree.
100%. Now let's take a look at the industrial metals. Let's take a look at silver. You know, we started the week off with silver fighting up against that 200-day moving average tie. And even though I like the analysis getting more consistent in gold, I like gold a little bit longer term. I do like silver a little bit more from a shorter term instrument. It's fighting up against a breakout potential of the 200-day moving average. The technical analysis has been very consistent. The question I have for you, Tyler, on silver is this tradable above that 200-day moving average at this point?
If you're going to trade it, that's the trade, right? Like, what else are you? I mean, look, could somebody try to buy it today in anticipation? Sure, but the reality is
You're not one to one.
your risk
Target one
reward's
is,
not there.
yep. Target one, any front running target one has to be 1 to 1 from a reward to risk ratio, and you're just too tight here.
Yeah, the next trade is obviously
Okay.
it is the breakout. Yep.
Okay, so do me a favor. Let's go to SLV because most people will not trade the actual silver contract. Let's go to SLV. Tyler, I want you to do me, and I know I'm putting you on the spot here, okay? But as an active trader, how would you map this trade out from a silver perspective? Entry, stop, target. Map me
Yeah,
out.
so
Map me out a trade here.
so if I was trading it, I would take the breakout over 2350.
Agreed. Me
Bonus that
too.
it's a nice easy round number.
I think it's easy.
If you want to be more of a conservative, maybe I'm trying to be in it for longer, give it more room. I mean, I wouldn't go any lower than the pivot low. Call it 2290.
I think you got to give silver room. If you don't, you're just going to get stopped out, and you're getting
Well, yeah, look at
frustrated
its
on
history.
bigger movements. Yep.
Doesn't this look a little messy? Like you need to give it some room.
It's not easy.
Yeah.
Agreed.
And by the way, which is what kind of argues for something cash flow-ish versus tight stop long call. But and then in terms of target, I mean, you kind of the thing is you have to have at least 1 times risk for like target one. So you're risking 60 cents. So automatically, I know I got to go like 24.10 at least, or else it's not even a good trade.
Well, I
right?
think I think you can go above 24.10. I think you can target the previous pivot point right there about 24.50 to 24.70.
Yeah. Yeah. So then you could say, hey, T1, T2. Yeah, I could map that out.
Yeah, I like it, but it again, it's silver. Obviously, you always want to understand the nature of the instrument you are trading, and this is a 24-hour instrument, which means you're going to have a little bit more wickety-wick nonsense than you would on individual equity plays.
And look, I mean, just as I look to the left, the further left I look, Matt, the more scared I get.
Oh, it's silver. It's
not
never,
well behaved.
It's never that clean when it comes to silver. I want to talk a little bit about the other industrial metals here as well, Tyler, as we're seeing a little bit of improving technical situation. Let's take a look at palladium here slash PA very quickly. Give me a read on this potential reversal.
Yeah, look, kind of a nice little almost cup and handle and a cup and handle. Look, the key here is you made a higher swing low because look at what it looked like before this last month. It looked terrible.
Yeah.
Nothing bullish whatsoever. You want to see demand start to increase and supply start to decrease. And that's what you saw, right? Like this is actually a good little lesson in trend reversal mechanics. Look, the strength of this rally, you even had some volume pick up a little bit. And then after a really strong rally, it doesn't make a lower low, it makes a higher low, right? And it's almost like sellers just are like, okay, we don't care anymore. Fine, take it. And then there's just a little bit of tug of war and neutrality, and nobody's in control. And now it's trying to break out. Like this is and you're above all the moving averages as well, the 50, 29, not the 200, but I don't know, like this is the most interested I would be as a bull on palladium since April. So yeah, you're looking for a breakout over 2190, and it's got room to run too. Like it's a pretty good. It
does. And you're looking at two things. Number one, an inflationary environment, but number two, you're also dealing with a infrastructure environment where the United States just basically approved a $1 to $1.2 trillion infrastructure plan. Typically speaking, Tyler, you want to be involved in metals a little bit, in materials a little bit when you're talking about infrastructure. And when the U.S. does things like this, guys, these major initiatives, what I see historically is other countries start to follow suit a little bit as well. I like the metals here. Silver fighting up against the 200-day moving average. Gold fighting up against a high base. Palladium here fighting a reversal analysis. Platinum slash PL very quickly, doing very similar to what silver is doing, just a little bit more choppy against that 200-day moving average. The last commodity I want to take a look at is copper here, slash HG. We're seeing a little bit of violation after an improving condition. I think you got to call this a breakdown here, Tyler, against that 200-day moving average. Tyler, how concerned are you with copper violating the 200-day moving average, and specifically, though, FCX here, Tyler? FCX is a very popular proxy vehicle for copper with the recent volatility in copper. FCX testing a breakout channel. My question to you, Tyler, technically is this. Are you concerned with FCX recent breakout with copper now violating the 200-day moving average, because we have not violated support yet on FCX?
Well, I certainly like the relative strength in FCX. Breaking a prior breakout zone is not as bearish as breaking horizontal support.
Agreed.
I hadn't looked at copper recently, so I'm actually, because I've been watching FCX, I'm like, so far so good. So I'm actually
it's slightly
surprised.
concerning.
Slightly concerning. I think the hard part is we've seen copper look like garbage multiple times over the last 6 months, and you never really get a full-fledged dam breaking and massive drop. Maybe I'm a little
$4 is the ultimate.
Yeah, like maybe I should be a little bit more paranoid. But I almost feel like if every time copper looked like it was going to break down, I freaked out, I would have had all this drama for nothing. So go ahead.
Oh, let me ask you a question. So on a day when we see copper violate support, we see oil violate support, but yet we don't see energy stocks violate support, and we don't see FCX violate support, equities relatively strong in comparison to their underlying commodities. I think they kind of got to fix that one way or the other. I still like the equities here. As long as those equities still hold support, I think you got to trust that.
I think so too. And I think ultimately, I mean, we're just kind of just talking right now, but ultimately it comes down to what is your trade and what would be the implications for your trade, right? So if my trade is I have naked puts on FCX, what am I supposed to do here?
You could care less.
Guess that copper is the canary in the coal mine, and that FCX is going to go down. No, I can't do that. Like, maybe it won't. So it's not actionable. And the same thing on XLE. It's like, if this is my vehicle, I'm not doing anything today, regardless of what crude oil looks like. Now, if you're long copper futures, you're not happy this morning. Like, you're not.
No. But I don't know a lot of traders that carry copper futures over minutes to hours.
Yep.
Right. All right. Let's move on outside the market skyline here, Tyler, and let's talk a little bit about stocks in the news here today. Let's first start with Visa. Visa didn't announce. Amazon announced that they are no longer accepting Visa payments in the UK due to their high processing fees. Obviously, Visa, a relative underperformer against most of the market, the sector, the industry. Tyler, this news sending Visa down lower. The only question I have for you is, because obviously no bullish trader is going to be picking it up here. Looking at this type of violation, where is major support on Visa that longer-term investors should track?
Well, I think it's 192, but this is where you go to the weekly chart just to zoom out a little bit. And yeah, the name of the game is, where's the next major weekly pivots? And I don't really see anything.
I don't see anything there
until 192. So yeah.
I agree. And volatility should see a little bit of fade down here as we test that range between 192 and 200. On the
Can I ask you a question on
the
news real quick? Sorry, Matt.
Yeah.
I feel okay. So the implication here, Amazon's like Visa, because, correct me if I'm wrong, these merchant fees come out of Amazon's pocket, not the consumer, correct?
Amazon would have to put up money in reserve to handle certain credit card processing. Yes.
Okay,
So
so
basically, Visa would say if you want to accept our cards, you basically have to put up $10 billion in reserves to handle any issues that might
chargebacks and stuff
arise.
like that.
Exactly.
Do I, as a consumer, have to pay more because Visa, as the middleman, takes more from Amazon's
Let me
pocket?
ask you a question. Whenever there's a middleman in any transaction, do the consumer pay more? So the answer is yes.
Okay, good. See, I'm
Yeah.
just asking obvious questions here. So ultimately, I mean, this isn't a good thing for Visa, but from a consumer perspective, if they want to squeeze these middlemen, I mean, doesn't this go along with the whole anti-bank
Amazon
and
should just say
crypto and
we're
remove
taking
the?
Bitcoin. Just pay us
They
Bitcoin.
should,
We won't
right?
have any transaction fee. Yeah.
Okay, here's my other question. So along these lines of, okay, Visa makes money. The more transactions, the more people use Visa cards, the more money they make. So as you get more competition, so Affirm has been adopted by like Walmart and Amazon as buy now, pay as you go, as an alternative maybe to using a credit card and paying the credit card provider. Like, doesn't this all not bode well for the likes of Visa and MasterCard?
Well, obviously they're going to have increased competition, not just from cryptos like Bitcoin, but obviously the how does the innovative type tech companies, the info tech companies that threaten the traditional credit card and traditional finance companies.
Yeah.
I think that is a major battle that's going to be played out over the next 10 years. But yes, they are competitors.
But don't you just love though that in the end the consumer wins? Like,
I love
battle it
competition.
out, punks. I don't
Listen,
care who wins. Because
listen.
ultimately you make life easier for me.
Competition in a capitalistic environment is obviously first and foremost in everything we try to do, because again, competition does what? It drives down prices as companies compete for those consumers. So yeah, I think at the end of the day, it is good for consumers, but obviously it is not good for Visa here. Visa's been underperforming the market, continues to underperform, getting rocked here today. Let's take a look at Boeing technically on an upgrade day out of Wells Fargo as it fights against the 200-day moving average. Technically here, you are seeing a little bit, I know it's crazy, but an improving environment from Boeing, and you're threatening a little bit of breakout off of reversal analysis here. Only question I have for you on Boeing is where does this start bullish for you? Because right now I do think you're in some degree of neutrality. Where would you say this is now a bullish trend? What has to break?
You don't. The answer is probably the initial breakout attempt. Here's why I don't feel great about this. Boeing, if you really wanted to pull me in, this is not the response I wanted,
Especially
to that
on an
breakout bar.
upgrade.
Yeah, look, like 2 days ago, I was like, Boeing, I hate you, but you're kind of making me like you. And what do, right? What do you do the next 2 days when you pull everybody in, when you're like high volume, breakout, I'm above the 200 MA, took out horizontal resistance? Your response is to go down and then gap and crap on an upgrade. Like, that's supposed to make me feel good? No, it's like now you have to do something epic to make me want to change my cautious view on wanting to buy you. Look, this is not a good look. In fairness, it hasn't broken any support levels. It's more so just the failed breakout attempt that kind of puts this on ice and says, all right, you got to prove it now. You got to take out the breakout bars high and really show me this is legit. And even then, I probably would be like, well, you're Boeing, so I don't know.
And that's what I was going to end on. Regards to what you said, I was going to say, but it's Boeing. Right. But I certainly agree with your analysis. When you're looking at a breakout to start the week and then obviously you fade on positive news, I don't think that's a positive sign for the stock. I agree. Roku getting absolutely blasted recently and gets blasted yet again. Roku on our option. I believe Roku was on our options report. Roku getting blasted on a downgrade here, Tyler. Obviously, gap down, sell down, looks to continue going down here. Where's that next support level, Ty?
This chart looks really gross. I got to go backwards in time because it's not a good sign, Matt, when it's like this stock is so low. Whatever my time frame
You
is,
can't
I
find
can't
a
even
support on the
I can't
daily.
find the last time it's been down here. I go further back in time.
You got to go to it's pretty bad when you got to go to a weekly just to find a support level.
Yeah, and honestly, like look, you print this out, put it in a textbook. This is a monster double top.
Monster double top.
M for murder. By the way, just a little technical analysis 101 here. The height, the theory says, okay, say you peaked at 490, the neckline, so to speak, or support of the double
Such
top
a wide range,
290. Yeah. You're talking like a 200 point the width of the reversal pattern. Technically, you could subtract that off, and it gives you like a price target of 90
and yet that would only go to pre-pandemic pricing. Like
that, last year.
That's where it was. Tyler, I don't see any support for another 46 points down to 200 though.
Yeah, correct. And that's the problem when a stock goes straight up on a rope, is it doesn't leave much by way of support. This looks gross, man. I would not want to own this thing right now. I'd be scared.
No, I think it does look like a little bit of a sell down and a gap down, sell down, and there's not a lot of support until you get into that 200 level. So keep an eye on Roku as it navigates this nasty breakdown. The last stock I want to talk before I talk a little bit about the earnings roundup here today is Activision. And Tyler, I want to just detail a little bit of this story, and then I'm going to ask you to break it down from a technical perspective. Tyler, are you familiar with kind of all of the news around Activision over the course of the last few months?
My filter has been you, and so I've gotten bits and pieces.
Okay, yes. let me update. Okay.
Yeah.
Okay. So in the summer, Activision comes under fire when the California Department of Fair Employment sued over allegations of sexual harassment, unequal pay, and retaliation against the employees. All pretty nasty. Would you agree?
As a business owner, you cannot say three things back to back that are any worse.
Can't get worse. Yes. Can't get worse. Okay. It was described by the California Department of Fair Employment. It was described as a frat boy culture. The SEC later launched an investigation. Activision then delayed two highly anticipated games for next year. They then missed on earnings, lowered guidance, and now, Tyler, major news coming out today. The Wall Street Journal reveals that the CEO was aware of many of the allegations and situations outlined in the California lawsuit and failed to report that to the board. Employees are now staging walkouts, protest. Activision's under fire. I've said for a long time, this is a company that is getting axed from the Tackle 25 for many years. It was the Tackle 25 darling as the leader in the gaming space. No longer the case. This company is going to get axed, and rightly so. What's your technical read here, Tyler?
Look, okay, the technical read, I swear, you give me all these juicy nuggets, and I'm like, I'm going to talk fundamentals for a second.
Fundamentally, let me be clear. Fundamentally, this company is literally under fire and garbage right now, and absolutely needs. Tim asked me a question.
Clean the slate, right? Like
why are you not firing everybody?
Yeah,
like fire everybody. This is the easiest decision a board could make since Enron. Like fire everybody.
Yep. Well, and the thing is you have good IP, like you have good, well, it is my perspective. They have good games. Like it's not like they don't know how to create a good
There's
game,
a reason they were a leader in the clubhouse from a gaming company perspective, right?
And so it's just kind of pathetic when it's like, look, you had the ability to make good money and to reward your shareholders, and you screwed it up, not because of terrible decisions with games and stuff necessarily, but because you just you let human nature and stupidity reign and destroy what could have been a great thing. Yeah, you're fired, dude. What do you want me to say? I'm cleaning house, and there could be a turnaround story down the road if they do it
I
right.
think there
But
will. I think there
yeah,
will. But the turnaround story cannot be based on the same people that created the problem in the first place.
nope,
That
not
cannot
at
happen.
all,
It
not at
cannot
all.
happen. And I'm going to say the same thing to Activision right now that I said to Boeing a couple years ago. You got to fire everybody, clean slate, and rebuild your company's image. And that cannot happen when the CEO of the company knew of the previous problems with the company
Yep.
and was not transparent and honest in those situations. This is a obvious situation where Activision needs to clean house, bring in new talent, and redefine the culture around that company, and that is certainly going to take some time. I'm a little concerned from not a little bit concerned. I'm very concerned with this company and a violation here today following a negative response on earnings. There's not
Yep.
a lot of support there. I see a lot of chop in front of Activision's future.
100%. And you could say is this a bargain? Blah blah blah. And it's
It might
like
be.
too
I don't
early. And
know.
yeah, you just don't know. And so why bother? Why risk it? Like put it on the radar, see what happens next quarter. But there will be time, right? Like
Listen,
turnaround things like this do not happen overnight.
if Activision gets just absolutely blasted over the next 3 to 4, 5, 6 months and they change leadership and you're setting it between $40 and $50 in price, you're going to be able to make an extremely value-based argument for
Yeah.
Activision. But Activision's got to go through that process first. There's
Yep.
not a lot of and here's the simple reality. When you don't have confidence in the leadership of the company, it really doesn't matter what the company does because you're investing not just in the company, but the leadership of that company. You are trusting them with your money to do right by you, right by other investors, and right by their constituents. And right
Yep.
now, Activision is failing their responsibility, which I would label as a fiduciary responsibility. They are failing that across the board to everybody, their clients, their customers, their employees, their investors. Everybody they're failing, and they got to get their act together, in my opinion. Let's move on, though. With that said, let's talk a little bit about earnings here today, and I'm going to rapid fire and get your technical read here, Tyler. Let's start with Lowe's here, LOW. Lowe's reports 273 versus 233, so a good beat on EPS. They also had positive commentary about the future as well. Their revenue number came in at a healthy 22.9 versus 21.6 billion. They also increased guidance here as well, Tyler, on the revenue side. We officially out of Lowe's got a beat and an increase in guidance at Tackle Trading. We call that the hat trick. They pulled it off. Tyler, what's your technical read?
Well, the problem is Home Depot stole your
It's still the
thunder.
thunder.
Yeah, and Lowe's went up so much yesterday in anticipation. You can look at today's bar and say, "Hey, I'm disappointed at the response. You were unable to hold the
I think you
gain."
got to take the last 2 days, though,
You
in that
do, you do,
response.
and just so everybody's clear, and I'm sure you talked about it yesterday. Home Depot went bananas
They
yesterday,
destroyed it.
and so Lowe's goes up in sympathy, and no surprise they did deliver. But the buoyancy, the snappiness was the rubber band had already been snapped before today, so didn't seem as impressive. The other thing that's tough, Matt, is just the candle. It's like, well, now I need to wait a few days to even do anything with this. I can't trade it after this type of bar. If you were a bull, this reiterates it. If you didn't have this on your radar, you put it on your radar. There's no trade
That's
here.
how I
You need
see
a
it.
couple of days.
I see it as a positive response. This area of the market has been showing a little bit of bullish momentum recently. You had some consolidation coming into earnings. Earnings solidifies the previous price movement, and now
Yep.
you're just looking at trend analysis moving into the future, which always means you're simply looking for a secondary pattern to develop within a growing bullish uptrend. Let's move on to Target here, TGT. Target reports $3.03 versus 287. Revenue came in at 25.7 versus 24.6. That resulted in a 13% yearly increase in revenue. They don't provide guidance, but so the raw numbers were fine. There's nothing wrong with the raw numbers. And if you look at Walmart very quickly, we just looked at Home Depot and Lowe's. You saw very similar price movements. You're seeing very similar price movements out of Walmart and Target as well, because a lot of the same commentary was made. Walmart had a very good, in my opinion, raw numbers, but they had some concern over margin contracting in 2022. Target, and that was due to a little bit of increasing inflationary costs. Target comes out today, and again, this is more about the commentary that was provided over Target and not necessarily their raw numbers, when Target talked about how increasing inflation in 2022 is certainly going to combat their margins because they're looking to maintain price thresholds for their consumers. I think you got to give Target a little bit of attaboy here, a little bit of a pat on the back, although the investors are like, pass on that inflation. Pass on that inflation. We know what the PPI report. As a consumer, I'm just going to say good job for Target, thinking about their constituents and their clients and their customers as well, not just what that max potential is in the short term. They're thinking about long term. That's why I like Target. But again, margin contracting in the future is a concern in the short term. Tyler, anything here to read from a technical perspective?
From a technical perspective, it's a mess. It's a mess, just like Walmart, right? Where it's like, okay, pause, give me some time. This is not a good response. And the chart is now quite a bit messier on Target than it used to be. So in fairness, it hasn't broken any support zones. It just gave back the prior 4 days. It's not a clean setup to do anything.
Okay, let me ask you a question though. Because I agree with you 100%. It is not clean. It's filthy. It needs a bath is what it needs. So does Walmart though. But doesn't Target, if this space solidifies itself, doesn't Target get cleaner faster?
Undoubtedly. Yeah.
Because I could see a
I just
scenario where Target holds support right now,
Yep.
reestablishes support, goes back into resistance, and you're still talking breakout in a week from now. Right. And the
100%.
opposite could occur, right? We could see it come down as well. That's why you got to kind of wait for that to set up. Walmart's just a choppy mess of nothingness.
Walmart's hard right here. There's nothing.
Walmart's garbage right now.
I want oversold, high IV, sell me some bull puts, but at this point, it's not there yet.
135 technical value at 135, but that's about it. Let's talk last. We got a few Chinese mega companies reporting over the next couple days. Baba and JD.com tomorrow, but I will be talking about their reports tomorrow. For today, though, we do have Baidu here. Baidu reporting 228 versus 203. Revenue came in at 5 billion versus that expectation of 5. They also reaffirmed guidance. So we got a lukewarm report, but we got a negative environment for Chinese stocks in general. Tyler, is there anything to see here? A lot of people have invested in Chinese stocks over the years, but in the last year, they have been running for the hills as they should have. Where do you build confidence here in any of these Chinese stock positions?
Dude, I don't know.
I don't know either.
I just know it's not right now. I just know it's not right now.
When the technical volatility subsides?
I mean, look, does it give you confidence when you arguably had some pretty compelling bullish patterns a month ago?
No, it doesn't.
And then this happens.
Even those bullish environments didn't get me, because I kept thinking, it's still overriding news of China could blow up anything.
Yes. So, and and at the same time, you have profits raining on U.S. stocks, where it's like, why am I picking this fight here? Why am I doing this?
Why mess? I agree. But when we're looking at Bob and JD, they're a little bit different. I mean, Bob is fighting a little bit of reversal analysis, has a chance to pick that up tomorrow. JD.com, if you look at JD very quickly, showing a little bit of relative strength against some of these other Chinese components. And you're looking at a little bit of resistance north of 86 that does look a little bit more consistent against the backdrop of what is happening in some of the other Chinese components. But in general, Tyler, I just come back to the same thing that you did. When there's so many great stocks to pick from in the U.S. marketplace, why are you messing with the additional variables in the Chinese stocks?
Yeah. Yeah.
That's where I come to as well. That is earnings roundup and stocks in the news. Now we're going to transition to another segment on Jedi options, and Tyler Craig is going to be walking us through how to read a risk graph. And Tyler, I love risk graphs. Option traders love risk graphs. But I think everybody should embrace risk graphs. Stock traders, option traders, you name it. Put your portfolio on a risk graph to understand everything. Tyler, turning it over to you for another edition of Jedi Options from Tackle Trading.
So I'm feeling artistic today. I wanted to draw some pictures, and risk graphs might be the most fun picture to draw when it comes to option trading. And this isn't a concept that only applies to a few people or a few strategies. Risk graphs are integral to learning how to trade options. And so if you want to learn how to trade options, this is a tool that is essential. Like, you have to learn how to use this tool, just like learning how to read an options chain. So we're going basic. We're going basic today. I use risk graphs all the time. And so let me give you a breakdown. They're not that hard. They're not that hard. My goal today in the next 10 minutes is to get you where you think these are just, easy as pie and you understand how to use them. Before I go to the actual tool on a platform like Thinkorswim, I want to give you the lay of the land here. And we're going to start with a stock trade to keep it easy. Okay. So in a risk graph, there is an X and a Y axis, a vertical line and a horizontal line. And sometimes the horizontal line's at the bottom, like a little table, but we're going to put it in the center here. And essentially, you got to get what your different axes represent. So on the left, you've got profit on the top, you've got loss on the bottom, and then in the middle, that horizontal line just represents zero or the break even. So if your graph is above that, you're making money. If you're below that, you're losing money. Very simple. And then the horizontal axis, so the vertical is profit and loss. The horizontal is representing the stock price, right? The stock price. And so as we move right or left, right, as we go this way or we go this way, you're manipulating the stock price to see what impact it has on your trade. So the beautiful thing about a risk graph, if we back up a step, why do we use this? We use this because you can model your trade. You can do a what if scenario and see how much money you're going to make. It doesn't have to be guesswork. It doesn't have to be a question mark. You can build a trade, stock or options. You can look at it on a risk graph and you can say, what if the stock goes up 5%? How much money am I going to make? What if the stock goes down to support? How much money am I going to lose? You can map out these what if scenarios so that you know the potential outcomes so you can make an informed decision. And it even gets better than that because there's multiple variables when you go to the options market. Stock price is just one, but time passing, volatility changing, those are other variables that you can change on the graph to see the impact it has on your trade. And so ultimately, banks often use the term stress test. Like the Federal Reserve, they did a stress test on the banks, make sure they had enough money, make sure they had enough collateral to withstand an adverse environment. Like what if 10% of the loans on your book default? Can you survive that? Stress testing a bank's balance sheet is done so that they know they can survive adverse scenarios. You could stress test a position using a risk graph. So when you understand the tool, you're going to be able to say, oh, what if this moves favorably? What if this moves unfavorably? Can I survive that? What's the impact? When banks do stress tests, it allows them to better understand their business and where they're at financially. When you stress test your option positions using a risk graph, it's the same outcome. You're going to better understand your portfolio and the types of risks you have and how to handle those. So that's why this can be helpful. To say nothing of the fact that this can help you know how many contracts to do or how many shares to buy. So from a risk management and position sizing perspective, we use graphs to figure out, oh, I can do 3 contracts or 5 contracts or 10 contracts, and I know what the risk is. Okay. All right. So that's the lay of the land. Now let's map out a trade or two and show you what it would look like. Okay. I'm going to take these arrows off here. Let's say this is a long stock trade. Very simple. I'm going to buy stock. Well, let's say I buy the stock for 50 bucks. So 50 is here. That's my purchase price. Usually we're going up in value over to the right. We're going down in value over to the left. And when I say usually, I mean every time. That's the way it's laid out. So what is my break even? Well, my break even would be 50 bucks. So that's where this risk graph would cross the zero line. And if the stock goes up, I should be making money. And so my risk graph would be going up over here. And if the stock goes down, I would be losing money. So my risk graph would go into the negative territory. So essentially, if you do that all at once, it's a 45-degree line from bottom left to top right. That's what a stock trade looks like. And when you're in the profit zone, they're going to shade this area green. You can just think of it that way. And then the area on the left underneath zero would be the amount of loss. And so then you could say, oh, well, if the stock goes up to $60, let's see where $60 intersects my risk graph. And then you can look at the corresponding profit on the left. And if you own 100 shares, the stock went up $10. So it would show you that you made $1,000, right? Or you could over on the left, you could say, what if the stock goes down to 40 bucks? You could see where that intersects your graph and look at the corresponding loss. And in this case, it'd be about $1,000 loss. Okay, so that's a long stock position. And you might think, well, that's pretty straightforward because my profit and loss, they come linearly. Like I make dollar for dollar as the stock goes up. I lose dollar for dollar as the stock goes down. So maybe if you can do that in your head, you don't even need a risk graph. And oftentimes stock traders decide not to use a risk graph because they can do this with a calculator. Where it gets complicated though is in the options market. It's not so straightforward because there's a lot of different variables. And so if instead of buying a stock, I bought a call option and I wanted to model that out, let's say that I bought a 50 strike call and I paid $3. Well, just knowing what we know about call options, your risk is what you paid. So the max loss or the max risk would be $3 or $300 per contract. And then the potential reward would be unlimited, right? Potential reward would be unlimited. So let me fix that. So when you look at the risk graph, if the stock's at $50 here or 40 or 60, well, below 50 bucks at expiration, this call isn't worth anything. So I know I could lose $300 if the call expires worthless. And that will happen if it's out of the money, which by the way, out of the money's over here, in the money's over here. If we're below 50, I'm gonna lose 300 bucks. We start to get above 50, the call has value at expiration. And the higher the stock goes, the more money I make. Incidentally, the break even on this would be 53 because your call needs to be $3 in the money to recoup your cost. But this is the shape of a long call option on a risk graph. And it has similar characteristics to long stock. It effectively is long stock if it's in the money, but if it goes out of the money, you can't lose anymore. And so there are similarities here. It's like, hey, if you like the upside of stock, but you don't like all the downside, how about you buy a call option? You've got similar upside, but you have limited downside. Well, me saying that, you may think, I don't understand what you mean. But when I show you visually on a risk graph, it's easier to grasp the difference, right? So you can imagine if you learn the risk graph of each option strategy, you're going to have a much better idea of what the heck's going on, okay? So we teach these risk graphs as a complement to understanding the numbers and the theory and the philosophy behind each option strategy. And then in your mind, you start to attach a picture to each different strategy. And they're all somewhat unique, and you get to the point where you can say, oh, this is a long call. This is a long put. This is a call vertical spread. This is an iron condor. And so these shapes tell you something about the characteristics of the trade, what you want to happen. If I did a 30-minute little video here, we could get into position sizing and doing more in-depth what-if scenarios. But my main objective today was to help you understand the x-axis, the y-axis, profit, loss, stock price, being able to understand which way the stock's moving and if you're getting a profit or a loss. consider this just a quick introduction to the basics of a risk graph. The next step is for you to actually go play with these, get some hands-on experience, maybe watch some of the other videos we have at Tackle Trading. But anyways, these are risk graphs, and that's the lesson for today.
Tyler, thank you so much for another great edition of Jedi Options. I'll tell you right now, Tyler, I love how you describe things. I loved your pace in how you teach things, but I love your visuals. I love your blackboarding here. Just, it's very simple to understand what we're looking at in risk graphs, tracking profit loss, understanding the picture based on strategy. And like we've always said with option traders, a lot of times they'll just start clicking on things until they like the risk graph. Love your description of risk graphs here today. You've been watching the Tackle Trading halftime report for what is today? 17th for Wednesday, Hump Day, November 17th. Tonight, we have another edition of Trade Masters, where two coaches from Tackle Trading will outline a delta trade, which is a directional trade, typically a swing trade. Then they'll take on a theta trade, one of their favorite cash flow strategies. And then we have a wild card round. I'm going to be in Discord here today as Tyler, I believe you're taking on Coach Mark today as well. He said he was ready. I talked to him earlier. He said he's ready for you.
Listen.
He said he's ready for you.
Listen, guys, I got a good streak going. Okay, let's not ruin a good thing here. You got to show up tonight. All right, I'm going to bring my A game. Mark is a good contender. It'll be a good fight. But listen, let's make the right choice tonight. Let's continue this so I can come back next week. Okay.
Awesome. And I will be on for the first few minutes of Trade Masters here tonight. I'll be on to promote our webinar we're doing on Monday, which is a webinar on for Tackle Trading 101 series on swing trading. So once again, if you are new to tackle and new to swing trading in general, definitely come hang out with me next Monday and I believe it's Monday at. I want to say it's Monday at 7 Eastern. I got to check. Maybe it's 8:30. I got to check that.
I think it's 8:30.
Okay, yeah. Monday at 8:30 Eastern Standard Time right here on Tackle Trading's YouTube channel. So I'll promote that on Trade Masters later tonight. But I will be in Discord to hang out with pro members over there in our Tackle Trading Discord channel as you guys navigate your trades. We're gonna break them down a little bit, what we like, what we don't about your picks as well. So hang out with me if you want to watch that later on tonight as well. Outside of that, we'll see you tomorrow, same time, same channel.